Hello everyone, welcome to this webinar primarily targeted at accountants, supply value added services. I hope you're having a great day wherever you are around Australia. Is $5,000 reasonable to pay accountants annually? This was a question asked in Accountants Daily on the 26th of July 2019. Where obviously some business operators had been saying that they weren't prepared to pay over $5,000. I think this illustrated that there was a resistance from some in the business community to paying premium fees for compliance work. Do your clients think that they're getting a value-added service in the supply of compliance services, if that's all you're providing to them? Let's think about it. How do you get paid more? Which was really the whole reasoning for the Accountants Daily articles. I think you need to clearly identify and articulate the benefit that your service is going to provide to your client from your client's point of view. And where do you start this? I think you've got to go back to the original engagement or re-engagement if you're now going to sit down and have this type of conversation with a long-term client. So let's look at the client engagement. Why not have a discussion with the client and identify what the client wants to do in their business? What is their business? And if they have a number of different activities, make sure you clearly identify those so that in your proposal, you will ensure that your client is going to receive management information back on those individual business operations. I don't think it's any good to just be showing that clients are going to receive a set of financial accounts that indicate a total income figure without any attempt being made to dissect that financial accounts into its components. What management information is your client currently receiving? And can you improve on that? Which you should be taking into account in identifying the service that you could provide. So what key services could you provide to your client to help them run a better business? I think the key is, and I've used the terms a couple of times already, the supply of management accounts rather than an annual set of accounts that are prepared primarily for the taxation office to enable the preparation of the taxation return. You need to subdivide the business activity into each component so that that information can be made available. So what are the individual business activities within the business? There might be a warehousing operation, there might be a transport division, there might be a separate office facility, of course, and there could be a retail shop, perhaps a wholesale business, perhaps a manufacturing business, all of which fit under the overall banner of the business. It's very important to help your client better manage their business that they're receiving individual financial reports for each activity and that everything's just not being put into one profit and loss account item called income with no dissection as to the individual activities that that income belongs to. So I put on the screen there a suggestion as to the business activities: sales, Materials, labor on cost. As your clients get bigger, I think they should be incorporating labor on costs to cover the sick pay and holiday pay and long service leave provisions, and any other direct costs that applies to that individual business unit, so that the gross profit on the individual activity is able to be determined. Isn't this far better than just having it all lumped together in one profit and loss account, showing income on an overall basis, less those direct costs, and an overall gross profit? Does that give the client any indication as to how they are trading on an individual basis? This will enable the gross profit percentage on each activity within the business to then be calculated. And this will lead to other key performance indicators being able to be calculated. Maybe labour to turnover within the individual units. It could be number of sales made by individual salespersons. And it will also enable benchmarking comparisons to then be prepared for the individual business units. As part of your review, so that you can develop a system for your client, a management accounting system to give them worthwhile information. If the client is giving credit, debtors is one of the key items that should be looked at. Does the client have an appropriate debtors system? Are they using appropriate terms of trade agreements? Hopefully they were drafted after January 2012, when personal property securities register commenced. Is there a retention of title agreement? Does the client staff understand the necessity for these agreements to be presented to new customers, to have the new customers sign those agreements and return them to the business, so that a decision can then be made in a very short time frame as to whether that new customer should be registered on the personal property securities register? If not, that is obviously a task that I'd be suggesting that you sit down and talk to your client about. Is the debtor's age analysis being calculated each month? And is debtor's days outstanding being calculated? And what is the client's follow-up on making sure they get paid? And perhaps this is a service that you could be indicating to your client that you could provide for them if they don't have the time or the resources to be able to undertake this properly. Work in progress can be a big problem for many businesses, whether they're trades or professional organisations. A progress claim's been made. This can be an area where cash flow management goes out the door a bit, because people don't realise the necessity to make sure that progress claims are being claimed. Don't wait until the job is finished before a claim is made. Are jobs being finished promptly? Or a problem job's been left in work in progress, not finalised, therefore the final result, which might be a bit of a disaster, is really not brought to account. And perhaps the line manager's waiting for another job to be finished that's got a very good result to hope that he'll be able to hide the overall result of that bad performance. So work in progress is something that you probably should have a good look at to see what could be done to improve your client's understanding of the controls necessary. Inventory. What's the investment in inventory? How does it compare to budget? Has it gone up? Or has it only gone up because of seasonal trends that have been budgeted for? What's the stock turn? Hopefully been achieved on individual items. Hopefully the system will tell your client that. Or if not, is stock turn able to be determined on a departmental basis? And what's happening with stock? Is there old and dilapidated stock still in the system? If not, are you advising your client to have a sale to try to get rid of that old stock that's costing a lot of money in warehousing and in interest, even though interest rates are a lot lower than what they have been? What about the assets of the business? Where are they? Where were they last night? Are they in someone else's possession on virtually a permanent loan? Are they leased to someone? Is there consignment stock stored in other business premises? Is your client involved in subcontracting? Are they a trade business that's contracting to builders? Those types of businesses can really get into trouble with preferential payment claims, but they could protect themselves if they were registered on the Personal Property Securities Register. And obviously those other assets, if they're sizable in value terms, should be considered for registration on the Personal Property Securities Register. But is your client aware of the problems that can confront him or her if they haven't registered assets that are in someone else's possession on the Personal Property Securities Register? Could be another interesting assignment for you to undertake with your client. What about the business risks? Is your client abiding by the rules and regulations of Fair Work Australia? There's a lot of those rules and regulations. And I suspect that there's many small and medium-sized enterprises really are not in full control of their situation when it comes to the rules of the workplace. Most of them will not be employing a specialist person as their industrial manager or human resources manager, whichever title you want to give to that. And whilst your firm mightn't be a specialist in that area, you could refer them on to a specialist so you know that that activity's been attended to. What about workplace health and safety issues? Is your client having fairly regular reviews undertaken by an independent consultant who gives them a report? And is the client making sure that those reports are discussed with management and action is implemented to fix any identified problems? Is insurance covers being reviewed, or are covers just automatically being renewed by the broker without really any input from your client? If there was a claim necessary, would the amount of money that your client's going to be received be enough to compensate them for the problem that they have? What are the particular risks facing this type of business? And you will need to do some talking, talk to other people in similar industries, talk to the client and identify what those risks are. And one of your roles could be to suggest to the client that some appropriate strategies could be put in place to try to minimize the effect of those risks. Charging for services. How often do you sit down and review with your client how they go about charging for their services? Let's start with a trades type business, a manufacturer, a carpenter, a plumber, an air conditioning firm. Have they appropriately reviewed what it is costing them to provide their services? Is the labour productivity of the individual team members in line with what management thinks it should be when they have done their calculations as to how they're going to charge for particular people? What's the materials markup? Is it being consistently applied throughout the business? Or does management think it's been applied and in some cases it's not been included in the price determination when quotations are being prepared? Have overhead expenses been utilised in the calculation of appropriate charge out rates? Are they an accurate set of overhead expenses applicable to this business? So in other words, what's the basis for the calculation of the charges that a trades business is going to use? Have they taken into account a targeted profit? And how does the charge out rate that you would determine by using a charge out rate calculator, which we have within ESS BizTools, how would that compare to the charge out rates and the assumptions re productivity, materials markup, even the profitability target that has been utilised in the charge out rates that are currently being used in the business? And can some changes be made? Could some improvements be made? Your client might be a professional firm. In fact, you may want to do this in your own firm to start with, but what's the budgeted labour productivity? What's the labour cost? What's the targeted profit? What are the overhead expenses? And how do these charge outs, when you calculate them using a calculator, compared to the charge out rates that are being utilised within your professional firm client or even your own firm? And should some changes be made? Your client may be a retail business. That's a little bit different, but again, retail businesses work around a significant investment in labour costs. So what are the labour costs? What are the overhead expenses? What's the targeted profit? But in retail, we've got this mix of products, haven't we, with various markups. So what are the assumptions that have been made on the types of products that are going to be sold and what the markup will be with the overhead expenses and the targeted profit and labour? Are those sales that you estimate going to be sufficient in those various product mixes to achieve the overall profit target? Or should some changes be made? We have a retail business calculator that enables you to do those sort of calculations, to do a range of what if calculations by saying to the client, well, perhaps we could do a change in the markup by 2% here and a little adjustment somewhere else, and let's see what the overall mix does. But then that's going to require ongoing monitoring to look at what the sales have been in those various product mixes on a weekly and monthly basis. Now, this is accounting work that if you were employed in those businesses as the internal accountant, I believe you'd be doing virtually every day in some aspect or not, depending what type of business you're in. Don't your business clients deserve the same sort of attention, or at least indicating to them that you could do that for them to improve their overall performance? What about budgets? Are you involved in the preparation of your clients' budgets, especially on an individual business unit basis, not putting it all together in one P&L account, but trying to break it down into individual manageable business units within the business? If your client's got the range of business units that I referred to earlier, there's really no connection between the retail shop and the storeroom business or the transport business. That's the reason why the accounting treatment should be done on an individual basis, and the same with the budgets. Cash flow forecasts. Are cash flow forecasts being prepared? Are they being updated every month to reflect changes that have occurred in the actual marketplace? This is work that you, as their external accountant, offering a broader range of professional services, going beyond compliance, I think should be providing to your clients. And I think the most important discussion you're then going to have with your client would be the quarterly business review meeting. Or in some instances, your client may agree to have a monthly business review meeting. And I would suggest that you would be factoring a ongoing commitment to a review meeting every quarter or month into your proposal to your client. There was a article in Accountant's Minute in April whereby a client had written a letter which was published in Accountant's Daily, basically pleading with his accountant to sit down and have a quarterly meeting with him so that they could discuss business issues. He wanted help in running his business. Last week, we presented a webinar on that matter. And if you want to watch that, please send us an email and we'll send you the link to it. But I think this really highlights the overall problem that's now starting to affect small businesses, medium-sized enterprises, and obviously some accounting firms. There is a significant amount of belt tightening happening in the business community. Things are fairly tough in various locations around Australia. And clients are really challenging paying high fees for what they consider is no value added work, compliance. My suggestion is you utilize the quarterly business review meeting as a key focal point that has to incorporate all of the other matters which we've discussed in this presentation to really justify the value add that you are supplying to your clients. Real accounting work, significantly beyond compliance work. Make sure there's an agenda for each of these meetings that your clients had his or her input on as well. The suggestion from the letter writer to Accountants Daily was that this program of meetings should be set in place, in stone, 12 months in advance. He was looking for a commitment from himself, but also from you, his accountant. Or it could be her accountant, of course. Let's have a meeting and consider the activities of my business. I think you should be making sure that reports are distributed at least 72 hours before the meeting. You don't want the client coming to the meeting unprepared. You want him walking in ready to ask a series of questions and to discuss issues. Make sure minutes are prepared for each of these meetings and that individual action plans are prepared for whoever has to do the work. It might be you, it might be your clients, it might be members of your team or the client's team. But get it all part of the process. I suggest to you this is supplying real accounting services. And I suspect this is what the small business and medium-sized enterprise market are looking for. They are looking for help in running their businesses. And many of them are starting to say they are not receiving that from a set of financial accounts. So have the discussion with your client. Highlight the quarterly or monthly business review meeting as the key conversation. You've probably got into the habit of having an annual review meeting with your client to look at the accounts and the taxation position. Still have that. So 5 meetings a year, but 4 of them on business matters, business improvement. The letter writer to Accountants Daily said, tax does not light me up. He wanted to talk about other issues. Now, whilst he was being a little bit flippant about taxation, I'm sure all business people realise it's a high cost and they need to treat it seriously. But most businesses, and I've tried to show you some of the issues here today, have got a whole range of other matters to be concerned about. And if you were working for them full time as an accountant, you would be looking at a whole range of those issues, and the tax return would be a very minor component of it. And I've just repeated there, I got in front of myself, indicated that tax did not light him up. He wanted to talk about other matters, about his business. How could the operations be improved? And his final plea was, help me run a better business. Are your clients asking you the same thing? How are you responding to that? We can assist you to deliver everything that we've talked about today. We've got a full range of articles and product packages that will enable you to deliver the type of services that we have discussed. And you'll be able to start supplying these professional services very shortly after you subscribe. We invite you to a webinar to take you and your team through the process. And then we make suggestions as to how you start to deliver these services to your clients. So please visit our websites, www.essbiztools.com.au is our main accountants, business advisors website, where you can view samples of a whole range of product packages. We've got 23 separate product packages on everything from chief financial officer services to crowdsource funding, equity raising, succession planning, budgets and cash flow forecasts, early stage innovation companies. We also have a grant finding package, www.essbizgrants.com.au. You can go onto that and use it for 1 or 2 clients free of charge, so you can see how the service works. It covers federal, state, and territory grants. And we'll give you a report that you can sit down then and have a conversation with your client. I think grants are fantastic for progressive accounting firms because they will get you different types of work. I'm in the middle of a strategic plan at present that 50% of the cost of it, and together with an ongoing mentoring program that will last for 12 months, is being paid for by a federal government department. There's those sorts of jobs out there. This is under the Business Growth Grant, and it was for a business that is a trade-based business. I haven't noticed any questions, and I probably should have referred a bit more to questions at the beginning. My apologies. I haven't got any questions that have been submitted, but if you think of anything later on that you would like to raise with me, please send me an email, peter@essbiztools.com.au, or you can telephone me on 1-800-232-088. My aim today was to pose some questions to you about supplying services to your clients that will be viewed by your clients as helping them to add value to their businesses. I hope it's the sort of service supply that your firm is committed to supplying. If you need any further assistance from us or information, please give me a ring or send me an email. Thank you for being with us today. Have a great day, and I will talk to you again next week. We have another webinar on another matter relative to accountants providing value-added services to help you secure ongoing, interesting, and exciting work from your clients. Have a great day. Goodbye.